Good morning and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin and I am here with my father, Carl Swenlin, and we are going to show you the charts that you need to be looking at and thinking about as you go into this trading week. We are not registered investment advisors, so all trading decisions are your own. Anything that you do here in this trading room, particularly buy points, sell points, buy signals, sell signals, none of those should be considered a call to action. They are based on mechanical signals only. We will be doing the overall market overview with Carl. He's going to be covering that. I will go into the sectors and look at what's going on with those presently, as well as what's going on under the hood for those sectors. And then we'll concentrate on an industry group or two and then move right on into your symbol requests. For symbol requests, please put them in the Q&A box. And if you would like to chat amongst yourselves, you can use the chat box. Just remember that when you put in a comment, use the drop-down menu and put it to everybody. Otherwise, if you don't send it to everyone, only goes to us and we only monitor the Q&A box. We will probably not get to everybody's symbol requests, but we will do our very best to get through those. And I think with that, we are able to, let's get it started. Let's share your screen, Dad, and see what's going on.
Okay. One other thing to remind you of is that when you're viewing the recording, be careful of which browser you use. When I use Firefox on the YouTube recordings, it's a terrible reproduction. So use something else. Try other browsers because it's so much better. Okay, starting out, Friday we had a nice strong up day, hit this line of resistance, overhead resistance, and we're pulling back a little bit today. Now, notice we've got a rising tops line that's secondary to a rising bottoms line. And notice that the rising bottoms line tightened up between this low and this low. So we've got a fairly tight rising wedge, which notice this thrust up did not make it to the top line. So this probably, we could be looking for a breakdown of this rising wedge, which is the normal outcome. It's a bearish formation, but in this time frame, it's not likely to extend very long. So look for a short-term pullback, maybe to this line, maybe a little bit below it. I queued up a chart of the indicators, our primary indicators. These are ones that I developed many years ago. We have the Swenlin trading oscillator for breadth and volume, and we have the IT breadth momentum and IT volume momentum indicators. Now, the short-term STOs are overbought totally, and this is as of Friday. This is an end-of-day indicator. And notice here, when you get overbought, it can be a significant top. And again, not a significant top. But it's not necessarily, doesn't necessarily have to work out that way. See, I had an example picked out.
I know that back in July, I mean, we saw overbought conditions. We saw overbought conditions back in mid-March, and we were able to relieve those with not a lot of, trouble, more of a pause, it seems.
True, yeah. In this area. So let's move down to the intermediate term indicators, and they are what is giving me confidence that we're going to see more to this rally. They've been very oversold, and now they've just started to break above the zero line, and if getting up to the top of the normal range, well, let's just say it's only up to 100 or in the plus or above that, but we've got a ways to go before that happens. And when it gets up to over bought, we're going to be looking for a more significant pullback. One of the things that I should have mentioned, and I will, and we're, as of tomorrow, we begin a 6-month period of favorable seasonality, which means that we can expect positive outcomes for the next 6 months. Doesn't always work that way, but we should be tuned in our analysis to look for positive outcomes more likely than not. Erin and I were talking about the Silver Cross and Golden Cross indexes this morning. And she said that with the Silver Cross index, we should be paying attention to the upside crossovers, particularly because they will help us find the good entry points. This is a 10 EMA, and we address it as being the signal line. When it crosses over, we assume a sell signal, or upside would be a buy signal. And that is certainly something we will be attuned to.
Yeah, it's really interesting because, we haven't really paid that close of attention to those crossovers on the indexes. And, looking at, I'll show them when we go through some of the sector charts. I mean, just this last crossover on that index would have gotten you into this market pretty early in comparison to what a lot of people are doing right now, which is playing catch up.
Right. And this is where I picked a top here. I need to take that line out, you know it? That's not, yeah. That doesn't belong there. But let me do that right now.
Yeah, but it certainly shows you that upside crossover coming in was very prescient. I mean, to be able to see those types of signals is, gosh, I feel like I should have had a V8, you know what I mean? Like, how did we miss some of this particular indicators, usefulness? So yes, I think we're going to be looking at this a lot more closely, probably try and back test just a little bit. We don't have, I think we have the SCI and GCI back to, was it 2016 maybe?
I think we've got about 7 years.
Yep. So we'll be taking a look at that and letting our subscribers certainly know when those happen. And then we will, write about those later for in our free blogs. So should be interesting. I'm kind of excited about it.
Well, it's one of those things. Perhaps that's why I didn't pick up on it. I'm looking at the Golden Cross here. It's much more. It's a lot slower, and it's more like a windsock to tell you where you are right now, rather than what necessarily what is apt to happen next. But right now, it's really pretty oversold. I was noticing that 20 stocks above their 20 EMA is overbought now. That can be dangerous, as you see here and here, but it can also take some time before it's like here it got oversold. I'm sorry, overbought, and it took a while before the price actually topped out. So let's move on to the 4. I've got the dollar index, UUP here. It's up 0.79% today. That would indicate that we should expect, all things being equal, that gold will be down 0.77%. But it's not. It's only down 0.34%. That's a plus. That means that gold is bucking the headwinds of a strong dollar move. Crude oil, basically consolidating a slight downward bias here, but I think this is going to be moving up further off of this low. Bonds got very far off of the declining tops line, and it's snapping back. It snapped back towards that line, and now it's backing off again. Let's look at like the 1-year chart better. You can see there's a long-term declining tops line that comes into play if bonds are strong enough to get above this shorter-term declining tops line.
Yeah, it's kind of confusing.
Go ahead.
Oh, it's kind of a confusing chart in a way because, you know, we have a PMO buy signal. We have stochastics. Well, they are rising, but they're starting to tip a little bit. But then you have price not being able to get all the way up there to that declining trend and turning back down. I mean, to me, there's a pretty good bearish bias on the chart, but the PMO is a little bit misleading.
Right, and this is a Fed week. Tomorrow they meet, and Wednesday they make the announcement. It's generally accepted or expected that there will be another increase of 75 basis points. And if those of you that don't know what the basis point system is, it means it'll be a 0.75% increase. Don't know why they don't use that plain language, but they don't.
Okay. Got to make it confusing.
The 10-year bond, we're looking at the yield on the 10-year, and it's came back to this rising trend line, and it's moving higher, trying to. I have a feeling now, I don't know if we get the increase from the Fed on Wednesday, I think this will be moving higher again. But if it does break down, this would be the next level of support right in here. Bitcoin is, it had a good week last week. It did get up over the 20,000 mark. 21,000 seems to be a resistance level for now. Generally speaking, it's in a basing pattern, and maybe we're just going to start a new rally. But my feeling is we've seen it. We've seen the best that we're going to see from the cryptocurrencies. Notice the Apple, huge day on Friday, and it's pulled back some today. It's why the market is having some difficulties. It's hard for it to move with the Apple being in both the S&P 500 and the Dow 30 Industrials. While I'm here, let's take a look at those other big techs. Adobe rallying off the lows of September and October. Amazon is the bigger news. really had a horrible week last week and is bouncing off. Well, this support line is based on this low, so we don't know how solid that's going to turn out to be. Google also in a bad way, down almost 40%. We'll just say 40% from the all-time highs. And that is one that everyone recommends that you get a hold of, but I think it's going to be a while before it's going to be a good time to buy these big techs. Meta broke down last week and is still not doing well this week. I forget, it's down over 70%. Let me just do a weekly on this and check the all-time high is moved off of the 1-year chart. Okay, 76% from the
Oh my goodness.
the all-time high down. So
Yeah, that's got some work to do.
Microsoft is actually got a higher low short term here. So perhaps it has seen the worst, but I wouldn't count on it. Netflix is rallying, and it was down 77% from its all-time high, and that's
Making it up a little bit there.
Right. I guess they figured out a way to put advertising on their content. I'm not sure why I would want to watch a show that I don't want to watch now with advertising. So there you go. NVIDIA down 70%. Has been rallying off of that.
Yeah, it actually looks pretty encouraging.
Yeah, for semis, but semis have been in a terrible funk.
Absolutely.
Oh yes, Tesla. Still, it's basically in a declining trend. Top beneath a bottom beneath the bottom, a top beneath the top, and PMO says it's likely to rally. I was speaking of Elon Musk, that he has taken over Twitter, and Twitter is no longer a public company. I have this as a default to my chart tool, which is the large cap Chinese stocks. They're not looking well at all. And the way they're handling things over there doesn't look like it's going to get any better. There's no low, there's no historical low to give support. Let's look at the monthly. Okay, finally, we get over the 2008 and 2005 low. Then surely it's heading there. You know, the Communist Party says, we don't care, however, how things are working out for the common people. We want what we want.
Yep. I have to say, I've been using Yang as a possible short position. I actually gave it up, but Yang is still doing quite well as a possible way to play this. But I would warn that it is a 3 times YANG.
Okay.
Yeah, YANG. It's a great way to play this type of a chart, but the problem is it is leveraged 3 times. So if you were to decide to pop in there, just be aware that you might want to slim your position by about 2/3 so that you won't get caught too hard in any kind of whipsaw that was going on. But yeah, it made that big move upward. I decided I wanted to get out, and I was pretty happy about it. I'm still pretty happy about it because this is a pretty long parabolic that's been going on. But certainly, since you saw the other chart, I figured I'd throw that one in there too.
Yeah, one of our viewers posted a comment on last week's show, and basically, if you're going to use, he says, if you're going to use these juiced up shares, this is a 3 times or 2 times shares, whatever, use the basic index for your technical analysis. In other words, if you have a 3 times the S&P 500 that you want to play, do your analysis on the SPY, because these juiced up funds tend to can overshoot and undershoot in both directions. So you have a much more stable view of what is actually likely to happen with the basic index.
Mm-hmm.
Now, this is not something that I've tried, but I'm just passing along what I think is a good idea. It sounds reasonable.
Mm-hmm.
And I think with that, I will pass it back to you, unless you have a question before I.
I have not seen any in the box. Let's see. How many trading room sessions do you have for your paid members? Are they any different from these free sessions? Yes, they are. I do have one other trading room that is subscriber only. That is on Fridays for DecisionPoint Diamond subscribers. It is an hour and a half instead of 1 hour. And I nearly every single time will get to every single symbol request. We look at what the diamonds in the rough were for the prior week, see how they did, determine why they did well, why they didn't do well, so we can learn from those charts, because everything does usually, I try and find a great setup, but sometimes there's something either I missed or there's something in the news that maybe affected it. So that would be more information on the additional trading rooms. So I'm glad you're enjoying this one.
Okay. And another question here is from Richard. Let's see some examples where the indicator failed and led to big losses. Maybe we'll get to something like that. Maybe we'll come across something. Right offhand, I'm not coming up with an immediate example.
Right. Yeah, I mean, the thing is with all of these, the indicators, they're obviously not 100%. They give us some great attention flags. And as I said, when we were looking at those Silver Cross index crossovers, it tends to just give you that bias information a little bit earlier. I do know that somebody was mentioning an echo, but it does appear that is fixed. So that is good. But yes, we'll see sometimes where these indicators, everything is lined up and then it doesn't do what you would expect. And that's part of what I go through on Fridays with my subscribers. So it's helpful. But yes, I'm sure there are examples where these signals didn't work out, but in general, it's more of a lag time versus a non-lag time. Sometimes they just lag and sometimes they are very prescient. So, one great example would be when the indicators in a bull market get overbought. That is not exactly a good time for to be selling in a bull market. But you'll notice on this chart that Erin has up here, we can see where the PMO got overbought there in, April, and then again in August. And sure enough, we got a price top. So overbought works really well in a bear market, not so great in a bull market. And exactly. Oversold is similar. Yep, great to see that in a bull market. And in a bear market, it's, as I think you coined the phrase, thin ice. It's not very strong foundation, even though they're oversold. And, we've seen that, I think, on the way down in this bear market as well. All right, so here are the sectors. Let's go ahead and I'll actually put this in a candle glance so we can see all of them at once. Get that Q&A box out of my view. And really going through, we're going to look at these PMOs and see which one which have newer strength, newer momentum, and which look the weakest. Well, I think it's pretty obvious that the comm services sector is certainly looking the weakest. There is that possibility we could get a reverse island here, but based on that top on the PMO well beneath the zero line, I would be very, very careful in this particular sector. Past that, you can see the XLY is still looking at a rising PMO, a little bit slower than these others and more, I would say, new momentum along with real estate, seeing some new momentum going on here. The strongest right now would be XLE, which has been well above its zero line move and it's still going up. Looking a little toppy to me. We'll go ahead and look at that chart under the surface, but looking a little bit toppy. Materials finally seeing a PMO above the zero line. XLI, which is one of my favorites right now, seeing a brand new silver cross of the 20 and 50, as well as a PMO that is rising very strongly and has gotten above the zero line. New momentum in utilities, so that's looking interesting. But really, when you look at all of these, other than the comm services sector, and XLY to some degree, we're seeing some really nice rallies coming out these lows in October.
Erin, we
Yes.
have two probable intermediate term buy signals. We have let's see, the financials and the industrials. The 20 EMA is crossing above the 50 EMA. And that's a solid buy signal.
Absolutely. Those are the kinds of things we're looking for. And then you can see here on industrials, which I did explain as kind of my pet right now that I'm watching really closely. And you can see that very nice breakout above the 200-day EMA. We have, as you said, that silver cross IT trend model buy signal coming in, PMO above zero. But this is what really interests me, is looking under the hood here and seeing such excellent participation. And look at this silver cross. So we got the crossover on the silver cross index back here, right around the time that we got the breakout from the declining trend and a breakout above the 50-day EMA. So the silver cross crossover, double crosses there. Maybe we'll call it something like the double cross, but you end up with a really nice entry on industrials. And when you see participation under the surface this strong, that is only going to continue rising. And, obviously a strongly rising silver cross index is a good thing for any sector or price, for any sector or index. And the rest of the indicators are just really right on here, with stochastics oscillating above 80. Again, not much to not like on the industrials chart. So we talked about comm services as being the weakest. And, I have to say, under the surface, we do have some participation, but notice the difference in numbers. When we were looking at the XLI chart, we've got 94%, 80% above their 20 and their 50s. Meanwhile, over here, we don't even have half of comm services with most of the indexes. Only less than half have a price above their 50-day EMA. Stochastics falling. So certainly the most weakest, holding some support here. But as I often say,
let me comment on that one. I have a comment on that one, XLC. We were just talking about Silver Cross buy signals crosses up through the signal line. And I just see here why there's a problem with that process. That it's not always a great idea. You'll notice that in September, October, the Silver Cross index was flat. And that's because it's a finite range. And when you get to the bottom of the range, things get worse and worse. But the moving average and the Silver Cross Index are going to flatten, and they're going to be right next to each other. So crossovers are sort of meaningless. Yeah, you see where it popped up. They're at the end, but it's when it comes out of a flat formation like that, and I'm sure that's one of the reasons that I don't always talk about that kind of thing.
Right. Because, if we get the oversold turns, they typically are going to lead and get you in. But there's an example right there where we got in, Silver Cross even continued to move upward, but price started to top and move lower. So certainly important to look at confirmation on some of these crossovers and go from there. But yes, I think that, going back in time and starting to back test a little bit on the silver and golden crosses, we'll have a better idea, I think, about how useful they are. But I would guess that the overbought and oversold of that indicator is going to make a difference. And then, of course, you have to consider whether you're in a bear market or not. Bear markets, your bullish signals are not going to turn out as often as they would in a bull market. So we have to be aware. Great points. All right, so here is consumer discretionary looking pretty good, but we do have stochastics topping. Relative strength is sort of, petering out here. PMO looking like it's going to decelerate a bit, and it did struggle here at the overhead resistance. So I'm not liking consumer discretionary in conjunction with, basically, I don't like it, but overall, I think most of these sectors are doing fairly well. You can see that stochastics on XLP are looking pretty good. Participation very strong beneath the surface. Breakouts, in this case, above all of the key moving averages, and a PMO that is just now moving above the zero line. Consumer staples still looks pretty good. XLE, as I said, we've still got a lot of strength there, a lot of participation. I mean, 100% of the stocks within XLE have price above their 200-day EMA. So that tells you pretty much all of the stocks within XLE have a bullish bias in the longer term.
Potential double top.
Indeed. We have to be careful. I mean, to me, with energy, it does have that sort of toppy look to it. I would really like to see a breakout here. But considering oil has not been doing a whole lot, seeing energy continue to rally has been, I think, really nice. Financials, a little less exciting to me, but we are starting to see some outperformance. We still need a little bit more participation to come in, but we already are at some overbought conditions here on the price above their 20 and 50. But overall, I mean, I think the chart looks pretty good. We've got the breakout above the 200, pulling back just a little bit to that 200-day. But there is that silver cross buy signal that is on its way. Healthcare has been really making a move. Biotechs in particular, I've liked. You can see that participation could still use a little bit of help here as far as price above the 50 and the 200. But we certainly have some, good foundation here. The relative performance against the SPY has been sort of up and down, but overall, I think that XLV looks quite good, broke the declining trend, moving above that 200-day EMA. XLI, as I said, kind of my pet one that I'm really watching closely, that silver cross moving up almost vertically, really nice participation under the surface. And materials, as we can see, making a nice move as well, but we are seeing a consolidation, going on right now after that breakout above the 50, but everything is looking pretty positive. I don't like seeing the participation in the longer term looking so weak with price not above 50 and 200-day EMAs. But when I look at XLB as a sector, you can see the 50-day and 20-day EMAs are well below the 200-day EMA. So you're going to see a very similar configuration on the stocks within the sector. So not particularly surprising that it is I wouldn't say struggling, but certainly not seeing the same type of participation that we have on some of these other sectors. Real estate, obviously making nice move, double bottom, confirmed it last week. And we're getting some decent participation improvements. But again, you know, price above the 20 and 50 still very much lacking. Technology, certainly an interesting area. If the market's going to continue to move higher, this is an area that is certainly of interest. It is getting started a little bit later than some of those other sectors, but you can see a nice crossover on that silver cross index, as well as a nearly vertical moving silver cross index, looking good. Participation above the 20, very, very good. Now we talk about overbought conditions, and we were talking about how they can persist. And you can see that right here back in July and August. These indicators were very overbought, but they managed to stay that way for quite some time. So while we're not liking these overbought readings, we also have to keep in mind that they can stick around for a while. And finally, utilities. Another nice rally, pulling back today a little bit strongly, but nothing going on here as far as the PMO and RSI. Everything's still very positive here. Nice steep rising trend that it is holding currently. Stochastic is above 80. I like utilities here. Not most exciting areas of the market to dive into, but certainly I think there's going to be some opportunity there. And if you're a little more risk averse, utilities do tend to travel a bit slower, a little bit less volatility. All right, I'm going to look at the industry groups within the industrials, since that's kind of where I'm concentrating right now this week. I do have to say, and I don't know that I mentioned it last week, but renewable energy also looking very interesting right now. All right, so what we want to do is just flip very quickly through these industry groups, look for the PMOs, look for the stochastics, and see where we're getting on some of the price movement. Silver cross coming in on airlines, looking very interesting. Aerospace, not quite holding above that 200-day EMA, but certainly looking great underneath the surface there. Nothing there for me in building materials. Nice breakout, but maybe could use a little bit of consolidation here for the defense industry. Industrial suppliers, one that I've been watching as well. Looks like it's consolidating a huge move that we had on Friday last week, but PMO getting into positive territory. You can see silver cross already occurring on industrial machinery, commercial vehicles and trucks. Nice big breakaway gap here. Looks like it wants to continue here for the commercial vehicles and trucks, and indicators looking pretty good. Just getting a little on the overbought side for me. Heavy construction also looking pretty good, but getting very close to some strong overhead resistance. Diversified industrials, new silver cross buy signal, and you can see that move above the 200, just consolidating that move a little bit. Seems to be a common theme today, where we've had all these big breakouts. We had a great week last week, but now it seems to be time for a breather. Business support and services looking great as well, with the PMO rising, but not quite yet over the zero line. And 200-day EMA looking a little bit ominous there. I'm not a fan of marine transportation. The volatility here and the sideways movement make it very much uninteresting to me, but I have to say we do have that PMO bottom above the signal line, so we could see a bit of a breakout out of this congested area of price movement that we've been seeing most of this year. And waste disposal, declining trend, not very interesting. Railroads, not very interesting, still not a breakout here. They do tend to be slow moving as well, I guess literally and figuratively there. Trucking, you can see also really kind of struggling, very congested, not an area I'd be looking in at for industrials. This one's just getting started, transportation services, but I think that there's better momentum in some of those prior industry groups here within industrials. So that is my deep dive today for the industrial sector. I think it is time now to move on to those symbol requests, and we will pop
got a
through.
question here. First of all, Kelly wants to know what index do you use to trade Yang? I don't know what is the underlying index for Yang. That's because that's
Yang, the one we looked at earlier.
right. That's
Okay.
that's
Yeah, it's I am guessing that the other side of it would be something like FXI, but the other one that they do have is Yin, yin and yang. So YINN is the opposite of yang, if you will. So obviously not doing that well, but this is the China bull 3 times. But I would imagine iShares has some of those China ETFs as well that you could look at. But yeah, I happen to remember that just because I thought that was so clever that they use yin and yang for their ETF symbols for the Chinese leverages.
FXI is the one I showed earlier. It's probably the underlying. But what I would say, whenever you have a question about a symbol, look it up on the internet, do an internet search on Yang, and you'll find pretty much what it is you want to know.
Well, and there's another thing that we don't talk about very often, but on StockCharts, you can come up here and do what's called a symbol summary. So we were talking about Yang, you come to the symbol summary, it's going to give you all the information about the ETF, the float, performance. But then at the bottom, it gives you the profile. It kind of tells you what it does. So it's a cap weighted of 50 of the largest Chinese stocks traded in Hong Kong. But obviously the bear side, there's a link. You can just click right there. It's going to give you holdings and all of that good stuff. So certainly one way to do it. And it's something I discovered on StockCharts right after I started doing diamond reports. So it was very convenient to have that background.
We have a question for retail. Why do you focus more on XLY instead of XRT?
Well, XLY, being one of the major sectors, certainly. Go for it.
Okay, we follow 11 sectors for the S&P 500. What the S&P has done is they've taken every stock in the S&P 500 and put it into a sector index, and they only go into one index. So XLY is one of those 11 sectors. Now, XRT is another retail sector index from S&P, and it could be a better choice for making a trade than XLY. I wouldn't say right offhand, but it probably has more retail stocks in it. It's not just limited to the S&P 500 stocks.
So again, you can come in and then come into the holdings. And so this gives you an idea of what their top holdings are for XRT. And, a lot of them are in XLY, but I think you're right. I think some of them are also. Yeah,
there may be some mid or even small cap stocks in there, but I wouldn't swear to that. Oh, here we have a question on the seasonality. Based on your experience, would you expect the seasonal trend to give the market a lift, or will bear fears crash the market? Also, how do you measure smart money versus dumb money fueling a rally? First of all, will it lift or crash the market, the seasonality? Yes, it will do one or the other. But seriously, it's just an expectation you should have. Favorable seasonality means seasonal patterns kick in, and sometimes they're stronger and more dominant than in other times. So that's what we would look at there. As far as measure of smart and dumb money, if you're in on a good trade, it must be you're the smart money. I don't know. But yeah, it's I don't know. I have to give that some thought and maybe answer it at another time.
Yeah, I think, what comes to mind first for me is looking at the name exposure versus the AAII exposure. So the name exposure, the National Association of Active Investment Managers, this tells you their exposure level, obviously, to the market, but they're kind of the big guys in there. But if you go to AAII, this is the American Association of Individual Investors. So this is pretty much any of you can go to their website and click on it and say, I'm bullish or I'm bearish. So, you've got a bigger pool here, and you probably have a bigger pool of not so sophisticated players as well. And you can see they're still pretty bearish, and most of the money managers here are starting to get pretty bullish. So that can kind of give you a little bit of an idea, I suppose.
Yes, good answer.
Yay!
We probably better hit some
Yes, I will go quickly too. So where are we gonna?
Start with UNG.
All right. Nice little double bottom coming in here on UNG. Stochastics rising. PMO is still a little bit indifferent, and RSI is still negative. I can see what you're looking at here with this double bottom, but this is a filled black candlestick right now, and those are bearish patterns. Typically, you're going to see the next day will be lower when you get these filled black candles. It's not an always thing, but it's a typical thing. So back here, it didn't really matter. But I would be very careful, especially the fact that it did gap up today. So this could very easily become a reverse island. So I would be kind of looking for some consolidation sideways at this point.
AVDX.
AVDX?
AV, Victor.
Victor. D, Delta?
Yeah, Victor, Delta X-ray.
All right, there we go. Our military background coming out. Okay, so all right, the first thing that I'm noticing here is a sideways trading range, and prices at the top of that range. That to me opens up risk just out of the gate, especially in a bear market. I do see, obviously the positive RSI, the PMO is rising a bit. Let me add a little bit of a thumbnail on there for us. Yeah, the PMO is still rising, stochastics above 80. I mean, this one doesn't look bad, but I know that for me, I wouldn't want to just jump right in here. If I jumped in, I would want a very tight stop because of the fact it is at the top of this trading range. But if we're correct and we are going to see the market rising further, technology, software, and semiconductors are going to be really interesting. And I always talk about needing confirmation. I think in this case, if I were coming to this chart as I am, I would be looking for a breakout here. Or if I got in, I would definitely want a really tight stop because there's a pretty good chance we're going to see it start moving down toward the bottom of the range.
Okay, MRK, Merck.
Merck. Farmers have been doing pretty well, and Merck is no exception. You can see some great outperformance going on, stochastics above 80. I mean, I think the only problem with this chart is that it's very overbought, but I think we need a weekly chart for this one, Dan.
It says also, how do you interpret shooting star candle post earnings?
Well, that's a good question. Let me finish with this one really quickly, but we have the breakout here on the weekly chart, weekly PMO rising. So, everything on this chart tells me that Merck is going to move higher. I think a little bit of a pullback would make an interesting opportunity to jump in right now, but we have to be careful because it's really overbought. So shooting star candlesticks after earnings. Oh gosh, I'm trying to think if we have a good example, maybe Apple. Not quite. But I know what you're talking about. So typically you get that big move to the upside, and then you get those candles. Let's see, I know Yang had some filled black candles here. It's not related to earnings, but what I'm telling you, I want to talk about the candlestick. So A shooting star candlestick has a really long wick. So you have price closing right there near the open and the close at the bottom of the range. So that's the intraday low, the bottom of that tail there. And that is the intraday high. And then you know that because it's not filled in black, that the bottom here of that body is your open and the close is the top of that body. So what happens in, of course, with earnings a lot of times is you get that big pop to the upside and then a pullback to back down to earth after an earnings call. And so I would still interpret them in a negative manner because, you know, if you've got the bears pulling price down to leave that giant wick, there's a good chance you're going to see some follow through to the downside. But a lot of times with earnings, those breakaway gaps, you're going to see winners keep on winning and they'll continue on higher.
Okay, COST.
Okay, Costco. All right, nice sort of rounded bottom. I suppose you could say double bottom, in fact. PMO rising, you know, all of the things are going right on this chart for me. It is in consumer staples, and we saw that that looks pretty good, holding above the 200. I like Costco right now, and I do see you have some pretty decent upside potential here. The next area of resistance, that's about a 12% gain as a possibility.
Okay. TSCO.
All right, Tractor Supply, I believe. Look at me, I'm getting these down. I'm learning all the symbols. Broke out of a trading range. You know, we looked at that earlier one that was still stuck in the range. Got the breakout here. It looks like it's going to continue. RSI positive. I mean, if I own this, I know a 2.3% decline is painful, but the rising trend really hasn't been busted. You have a long-term trend model signal coming in with a golden cross of the 50 and 200. I like this one in the short term. Let's look at it on the weekly. Oh, look at that PMO, Dad. I like that weekly PMO on this breakout. Could form a bit of a flag. I like this one. I think it's lined up pretty well, and it is in that specialty retailers area.
Okay, ADV.
Wow, really nice. I like seeing that just steady rising trend. PMO not overbought, just got above the 0 line. I mean, I guess you could say it's overbought near term, but overall, you know, you obviously would expect a PMO to move much higher than that. You could take a look at the 3-year range. And there you go. You can see on the upside, it's more of a 8 to -8 kind of a range. So we still have some movement to go to the upside. I do see that we don't have a break of that big declining trend, though, when I look at the longer term chart. But I like this. I think it's moving nicely. Certainly, I would look at it as a hold, possible buy, but your upside potential before you hit resistance is maybe about 10%. Of course, I'd be happy with a 10% position, but there are some out there that look a little better, but really nice chart.
Okay, KULR.
KULR. All right. Kind of a consolidation pausing after this really big move. Don't know if that is earnings related or not. Let's see. RSI positive, not really that overbought. This pause seems to be doing the job. Stochastic staying above 80. PMO still rising as this consolidation occurs. It looks a little toppy just because, you know, you're not getting sort of that little bit of a flag. It's just sort of this, you know, congested little blob, if you will, at the top of this flagpole. But everything on as far as the indicators tell us we can get more out of it. And the 6% rise today is pretty encouraging. Let's see, weekly chart. Really nice. I mean, last week's breakout was really impressive, getting it above this area. Very strong overhead resistance. And next up over here for resistance, a 30% move is where your upside target could be on a weekly chart. And with that weekly PMO, I'm liking this.
Okay, LABU.
This is the 3 times biotech. I did mention that I do like the biotechs. I'm going to throw us over here to IBB because it's not leveraged. And you can see that really nice move above the 200-day. Everything going well here. I know I was on the pitch last week, and Dave, gosh, I'm losing the name right now. It's not Ramsey, it's Dave Landry. Dave Landry brought LABU to the table for one of his picks. So I know I'm not alone in liking biotechs at this point. Nice little breakout. Looks like it's pausing in preparation to move even higher. So liking the biotech still.
EWZ.
Careful though, LABU is leveraged 3 times.
EWZ.
All right, Brazil. Again, these are the kind of patterns I'm not a fan of when you really are just looking at kind of a congested sideways movement. You really need to see a breakout before you get involved in one of these, in my opinion. PMO moving lower. Yeah, stochastic's turning up, but yeah, an RSI is kind of not telling us anything. I think there are more exciting investments out there. If you're in this, I certainly could see holding it, but I'd want to set my stop probably right in this area. Let's see, where would that be from here? Yep, about a 7%, 7.5% stop if I own this, but I don't think I'd be jumping in.
Okay, we're down to 1.5 minutes.
All right.
PNC.
PNC?
No, Papa November Charlie.
PNC Bank. Yes, so financials looking pretty good. I noticed right off the bat here, though, that this one is not performing as well as others in its group. This is a comparison of the stock to the industry group, and that's starting to fail. So this might not be the best choice within the group, but certainly everything going pretty well on the chart. I don't like seeing it hit this area of overhead resistance and turning back down, but we do have a silver cross on the way. PMO is now in positive territory. I have to say I'm kind of lukewarm about this one. Again, sort of that congested sideways movement. I think there might be better choices within the bank area than this particular one.
Okay, 40 seconds.
Okay.
AEO.
American Eagle Outfitters. All right, well, I like this sort of scoopy, is that really a word? Probably not.
How about a saucer?
That's a nice technical term. So you can see that we have that rounded price bottom there. PMO, yeah, just hit positive territory. We're stuck here a little bit under this short-term resistance, but we got above this really strong overhead resistance. So I'm liking that it's consolidating a little bit there on top of it, performing in line with the group, outperforming the S&P. I like this one. I think I'd like it even better on a breakout above this particular area of overhead resistance, but I think it's on the right track. Ooh. I think I covered it all. Let me go ahead and stop my share. Thanks everybody for joining us here live. If you'd like to join us live, just click on the link below the YouTube viewer. And if you're watching on StockCharts TV, if you go to our homepage, the registration link is right there on DecisionPoint.com. And with that, we want to wish you all a great week and good luck and good trading.